Tokenization is ETF on steroids. Tokenization of everything has been the theme in crypto since 2017, and only now we're really starting to see that wave. I think that eventually you will have an account, call it a wallet, call it a bank account, call it however, depending on what you prefer. And there you will gonna have cash, you will gonna have equities, commodities, fixed income, whatever you wanna have as an asset, but they will all be fully digitally represented, which means that you can take them out and send them away and use it however you want, outside of just the lock that a centralized intermediary is giving you. It's 10x stronger in terms of how much facilitates access to assets.
He is a former Roland Berger consultant, but made the switch to working full-time in crypto. With Keyrock, he co-founded the most successful European crypto market maker and infrastructure provider. In this episode, we will talk crypto markets, asset tokenization, and what crypto can learn from traditional finance. First of all, welcome to my guest, Kevin de Patul.
Thank you very much. Thanks for having me.
Yeah, let's start by talking about your career a bit. You've been into consulting, but at some point discovered cryptocurrencies. What was it that fascinated you back then? And are those the same topics that you find fascinating today?
Yeah, I do have a rather unusual background for the founder and CEO of a investment company, not having worked actually in TradFi before founding Keyrock. But so I worked at Roland Berger for 4 years. And it's actually when I was there, I think it was towards what was it, like 2015, that I started to be more and more interested into Bitcoin. That was grabbing, of course, the headlines, back then predominantly. I mean, to some extent still now, but especially back then, Bitcoin was really what everybody was talking the most about. And so I started to get into it in 2015, trying to understand what it was. And I mean, from the beginning, honestly, I got very interested in the optionality that it gave, right? Is that, you have on the one end, the traditional, very centralized system that we live in that, in Western Europe works well, in many other places doesn't, but that's the only system there is. And then with Bitcoin, all of a sudden you see a potential alternative, popping up where, here is a different way to exchange value, a different type of value, and that, can provide a optionality. And I found that super interesting. So when I was at Roland Berger, we started to publish paper and thought leadership on that topic for our clients. But as you can imagine, the clients of Roland Berger and blockchain in 2015, there wasn't much of an overlap. So there was many publishing articles. We did do an interview of Vitalik actually back, I think that was in 2016 or 2015. But yeah, it didn't resonate that much with our very large corporate clients back then. And so eventually, I met my two co-founders at an event around blockchain and cryptocurrencies, and that's where we met, and we decided to get started with Keyrock basically, and that was 7.5 years ago.
Mm. Yeah, let's discuss markets a bit. The current Bitcoin cycle feels a bit different to me, at least. It's sort of feels longer, and Bitcoin is dipping today. We're recording on the 6th of June. What's your opinion about the Bitcoin cycle? Where are we in the cycle right now, or are there cycles anymore?
I think actually your last point is the main one for me. Like you're saying, that the cycle feels a bit different. I would try to find direct similarities between different parts of cycles and whether there is really one. Yeah, of course, there's kind of this 4 years time window with halving that has somewhat of a pattern, but I do think each cycle is somewhat different. I do think now, if you look at the market dynamics that we're facing, the participants in the market that we're seeing compared to what it was even 12 months ago, I think it's very, very hard to draw any type of comparison. I mean, when I started in this market, everything was 100% retail driven, everything, right? And when I say retail, I'm really talking about a very small niche of people that was very interested and able to to navigate the complexities, back in 2017, for example, of getting their hands on crypto. Now today, we're talking about markets that are moving, hand in hand with massive asset managers like BlackRock, Fidelity, their ETFs, options being traded in large volume on CMEs. It's not at all the same market. Of course, there is still, a lot of retail interest, and even more so than before, because you have much more distribution avenues, so to speak, with more and more kind of banks and brokers and neobanks offering direct access to their clients. But also you have a very strong institutional participation in the market, and that definitely, I think, changes, makes any comparison between this cycle and previous one very, very complicated. So I think that, personally, and I guess it's somewhat transparent into how Kirok is set up. We're a fully delta neutral firm, right? So I only consider price action on Bitcoin or anything else on a time horizon of 12 months. Like what's going to happen? Honestly, I couldn't tell. Like I've been in this market full time for 7-8 years. What is the price going to be like next week? I have absolutely no idea. But what is it going to be? In 1 year, they have a very, very strong conviction that it's going to be much higher than today. If you look at what used to be kind of the big risk factors around the markets, well, most of them are gone now. So it feels like from regulatory perspective, if things are not clear everywhere, but you can see that there's a mindset to make things clearer eventually. So definitely this is bringing a lot more inherent clarity for institutional players. You see that you have retails, you have companies, you have countries, seeing the value of an asset like Bitcoin. So I'm all the lights are green, so to speak. So I'm where is it going to be next week? How is it compared to this cycle versus next? I think it's hard to draw comparisons, but would I be happy to buy Bitcoin today? Definitely.
Mhm. What about the altcoins? You said you are not really comfortable saying where the price is in the next weeks, but people do expect like sort of a altcoin season. Are you with that as well, or do you think like Bitcoin's gonna dominate all the way through the cycle?
So I think that if there is one part, I guess, of the cycle and the different trends that we are seeing that are starting to be quite different this time around, is that everything is a lot less fueled by hype. And so even the very name of altcoin season, I mean, what does it mean, right? In the altcoins, you have loads of them that are great, you have loads of them that are absolute crap. So why would they move together? And I think that we're starting to see now, over the last, I guess, 12, 18 months, it's less and less driven by just hype and more by fundamentals. Like you have some altcoins that are performing, extraordinarily well because their pricing initially was well done. They actually serve a purpose. They have a user base, they have revenue generation, and then it makes sense that the price would go up, right? And you have many others that simply are not there yet in terms of fundamentals, and then I don't see why they would start, popping up just because of an altcoin season. Of course, there is still a bit of FOMO and market dynamics, which could bring things forward, and we've seen that even a month ago, right? ETH starts to go up a bit, and all of a sudden the entire market follows. So there is some of that herd dynamics that is still there, as on any market. But I do think that movements are going to be a lot less homogeneous on this in these cycles, because all the participants in the market, both kind of the historic participants that have been engaged in the market for a long time, but also these new entrants, a lot more on the institutional side, they recognize individual value rather than having a blanket term on potential thousands of assets, where you have a lot of disparity between which one makes sense, which one don't, and what are the fundamentals behind it.
Mm. Yeah, that sounds interesting. Do you have any like favorite projects at the moment? When you say like the market doesn't really move homogeneously, then there must be some sort of projects that are particularly well positioned for moves in the next time.
So I think that, I mean, definitely, I mean, I have a lot of projects that I follow closely. A lot of them that we work with as well. As market makers, I see a lot of a narrative that make tremendous sense, right? So this is something that I see. Yes, I think today, especially yesterday with Circle's IPO, right? I think it really kind of cemented the fact that the big narrative right now is stable coins, and more broadly RWAs, right? So the bringing traditionally recognized type of value, bringing that on chain, be it with just cash as with stable coins, but also with equities, with credit markets. So I think that this is really kind of the flavor of the last few weeks and months, and quite frankly is the thesis for which we started Kirok 7 years ago, and the idea that crypto is kind of a proof of concept of how you can digitally represent value. And right now there is lots of different types of value that are digitally represented. Bitcoin is entirely new. Then you have altcoins, utilities token. You have lots of different NFTs. Lots of different things. And eventually that concept is going to be applied, to all types of assets. And we're really starting to see that now. So I think that projects that provide infrastructure that allow people to exchange value efficiently, projects that are actively bringing value on chain, projects that are really allowing supply and demand to meet on those assets are things that I'm quite excited about, definitely.
Mm. Let's talk about Keyrock a bit. You mentioned already that Keyrock is a sort of market maker. For those that aren't deep into finance, what does a market maker actually do?
Yeah, so I mean, we started as a market maker. That's really kind of our historical kind of first service that we provided, and we've really expanded over the last 7 years to really position ourselves as more as a global investment firm, and we support our clients across multiple services and products. But to focus on market making, so which is where we started in 2017. Basically, if you consider a market, right, a market is supply meeting demand, right, at a given price at a given time, right? So if you want to buy Bitcoin, you go on a market, you need to find somebody that wants to sell the same quantity at the price that you're interested at that very same moment. And this ability to easily exchange an asset, in this case Bitcoin, is called liquidity, right? If you can easily change Bitcoin into cash, that means that Bitcoin is liquid. If you can do it you can do it fast and do it at the right price. Now the reality is that it's quite rare for a same trade at the exact same quantity at the exact same time, and that's usually where market makers come in. So the role of market makers is really to bridge the gap between the two. So if you want to buy Bitcoin at a certain price right now, as a market maker, I'm going to be there on the market, making the market, and being ready. If you want to buy, I'm going to be there ready to sell, right? I'm ready to sell that Bitcoin to you. And the other way around, if you want to sell, I'm here waiting to buy, of course, at a slightly different price, which is where we make our margins, what we call the spread between our buying and our selling price. But so a market maker is really there to be active on the market at all times. So in the case of an exchange, we are there on the order book at all times, ready to buy and ready to sell, to make sure that we make the transfer of value and kind of the exchange of assets as efficient as possible. And so in doing so, we're bringing liquidity and efficiency to the market. It's a role. It's quite interesting because it's the role of a market maker is a big topic in crypto, right? And it's really discussed a lot. It's something that exists on every market in the world. Like if you go on any equity market, any commodities market, bond markets, you have market makers that are there, making the market efficient. And basically, it's the same in crypto. And so you have different types of market makers on the market. You can, if you, I don't know which exchange you usually trade on, if you do, right? But I'm going to take a European, I mean, what used to be a European one, but they sold yesterday, right? But so if you take Bitstamp, you start trading on Bitstamp, you open a buy order, you open a sell order, you're a market maker, right? So anybody can be a market maker. And so you can either do that as a trading strategy. You can be a hedge fund, just having a delta neutral trading strategy that is market making. I'm gonna buy here, I'm gonna sell there, and earn that spread, and that's it. But you can also be a market maker, really providing a service. In which case, your client usually is a company that issues the token. So the token issuers are our clients, and that's what we do. We're not a hedge fund from the very beginning. We're a service. We provide a service to token issuers, and so they contract us to ensure that, okay, I'm going to get listed on a certain exchange. I want to make sure for my community, for my token holders, that if they want to get in, if they want to get out, there's always a counterparty on the market willing to buy or sell. And so I'm going to contract a market maker like Keyrock to be there and support the market. And so I think it's important when we consider market making to differentiate what is market making as a delta neutral trading strategy for hedge funds, where they optimize their return, by trading a certain way. Great. And then you have market making as really a service that is provided to token issuers, to holders to some extent of that token, as a way to really build the infrastructure of the market and make it more efficient. And so that's why, when you started introduction, you mentioned we're market maker and infrastructure provider. That's what we mean by that.
You sent us over a report. In the report, Keyrock explores how blockchain-based tokenization is transforming traditional financial markets by digitizing real-world assets, such as, for example, US treasuries or equities. And the authors compare this moment to the rise of ETFs, presenting tokenization as the next leap forward in financial efficiency. My question is, why do you think that asset tokenization on the blockchain is so important in the future of financial markets?
But I think basically if you consider digital assets, right? Why are they interesting? And I'm going to give you some example, but my conviction is that it's very interesting because it's simply a more efficient way to represent and exchange value, right? And to take a very concrete example. What is the largest market cap in Germany?
No
Do you
idea.
know?
Is it Deutsche Bank?
Right, let's take Deutsche Bank.
Yeah.
You have a stock, a stock of Deutsche Bank, right? You have it, right? You own it. You want to, for whatever reason, and I don't want to comment on the prospect of the Deutsche Bank stock, right? They are very good partners of ours, but for whatever reason, you want to sell it. You want to sell, one share. I want to buy it right now at the price, and we agree on it. You cannot sell it to me. How can I buy that share from you today? I just can't. Like right now, it's not possible. And if we were, recording this podcast on a Saturday, and you were in Germany and I were somewhere in, I don't know, West Africa, it would be even harder. Absolutely impossible for us to make that trade. Now, if you have that same share, everything is the same, right? The same regulatory framework, the same information to shareholders, everything is the same. But that share is represented by a token, right? On a distributed ledger, on a blockchain. If I want to buy it from you, you just show me a QR code on screen and you tell me I don't even want to sell the whole share. I want to sell 1/10 of the share. I scan this, wallet to wallet, we make an immediate transactions, and that trade is done. Nothing else is different, right? I'm still buying a share of Deutsche Bank. It's still, the value of the share is the same. It's linked to the economic prospect of Deutsche Bank as a company. Everything is the same. But simply because it's a different way, a different technological way to represent value, all of a sudden you don't need 25 intermediaries in between your broker, a centralized exchange, a central depository, a custodian. You don't need all of that. You can trade immediately between us and 24/7 everywhere in the world, just like if I was sending you a WhatsApp. So when you think about that, I mean, all of a sudden the access to value, if value is fully digital, the access is just tremendously greater. It becomes a lot easier to have access to lots of different types of value, to exchange it, to use it in ways that in today's completely locked and centralized system is absolutely impossible. And so it's really that logic that makes us say that it's not a philosophical debate whether everything should be centralized or decentralized. It's just that if you look at digital assets from a purely economical standpoint, it is a better way to exchange value. It's more transparent, it's cheaper, it's faster. The same way that it's a lot better to send an email than to send a snail mail, a letter. It's the same thing with digital assets. And so that logic applies to assets like cash. That's why Circle did 250% on their IPO yesterday, right? Because there's tremendous value in representing cash in a fully digital way. But that also applies to loads of different types of assets. So you mentioned treasuries, lots of tokenized money market funds that we're seeing on the market, equities that we're very strongly believe is going to be the next big wave, but also private credit markets, potentially real estate funds, you name it. And the reason why we see this as similar to ETFs, it's simply because just as ETF did, it makes access easier. It makes access to certain assets. In the case of ETF, before if you wanted to have access to have exposure to a well-diversified portfolio, you had to go through a mutual fund, right? Now, all of a sudden, you have an ETF that might represent the same diversification, but it's being traded on an exchange. You just buy the share. You have continuous pricing. It's more transparent, and it's very easy to access. Well, the logic is the same for digital assets, but it's ETF on steroids, because all of a sudden it's not only that you have continuous pricing and that you have transparency, with the issuer of the ETF, is that you apply that to everybody in the world, fully peer-to-peer potentially, and anybody can exchange value as easy as they exchange a WhatsApp. So to make it a bit punchy, I would say the tokenization is ETF on steroids. Yeah, it's just 10x stronger in terms of how much it facilitates access to assets.
Yeah, that sounds fascinating. Isn't that would it follow that all those neo brokers such as Robinhood are going to be out of business in 10 years because their business model relies on that centralization aspect?
But I mean, I think it depends, honestly. It's what I say when I discuss why I found Bitcoin so interesting. I like optionality, but I don't think it's a one-to-one replacement, right? The fact that, I could buy a share from you today because it's convenient doesn't mean that all of a sudden I'm going to keep all of my capital on my own ledger at home, and I'm never going to touch a bank or a broker again. No, it's just that I can do both, right? And I think that for many people, it's great, and actually, I think for everyone, depending on the size of your transaction, it's great to also work with intermediaries. So I think that players like Robinhood, or they're a neo broker, but any traditional broker, any traditional bank, I think they're still going to have loads of clients. What the clients will not know, however, is that in the back, all of the backend on the bank has been upgraded to ledgers, and so all of a sudden, when they send, I used to have a Deutsche Bank share in my broker account, and I couldn't do anything with it. I could not just send that share to you. But now I still work with my bank. I still pay somewhat of a fee with my bank because I want to trust them with the custody, because I don't want to do it myself for whatever reason. But since they upgraded their entire backend to a digital representation of value, all of a sudden that share, now I can take it out. I can put it as collateral on a DeFi lending protocol so that I can buy a house. Awesome. I'm still using my bank, but it's simply that the backend has been upgraded to something that is a lot more efficient. And if for whatever reason I stop trusting that bank, or if I live in a country where I stop trusting the central bank for X, Y, and Z reason, and we see many places in the world where that's the case today, I have an option. Like, I stop trusting it, no worries. Take your capital out, take your assets out, use your physical wallet that you trust, and you have options. So I don't think it's about one replacing the other. It's just that where today you have one model, one paradigm, where everything has to go through centralized third parties, centralized intermediaries that you must trust, or hope that the regulation is strong enough to keep them under control. You only have that one model. Well, now with digital assets, you have a second model as well. And I think that in general, yes, you might have a bit of a cannibalization between the two, right? Because some clients that were today stuck in a centralized model, all of a sudden they want to do part of their transaction in a decentralized model. So there might be some cannibalization, but I do think that in general, it's more about growing the pie. It's just that if today you have 100 people that have access to capital markets and do it through their centralized, trusted intermediaries at a worldwide level, tomorrow, when all value is digital, you don't have 100 people that have access to it. You have 10,000. So yeah, there might be some cannibalization, one left to right, but in general, the pie just got much bigger. And so I think for players like Robinhood, or any bank, any broker, it's not about, oh, I'm going to lose my entire. They are going to lose their entire market if they don't upgrade themselves. Like, if you're a bank today and you don't have an app, that's it. I think in 10 years, if you're a bank and your backend is not based on the blockchain, you're dead. And not for philosophical reasons, because your clients can do 10 times less than the clients of the bank that has upgraded everything. So it's, in the end, it's just going to be an upgrade of the tech that allows us to exchange value.
It's super interesting. Like, would your vision include that in the future we hold, like, in a, let's say, smart wallet, Coinbase wallet, whatever, we hold our Bitcoin, our Ethereum, and also our stocks, treasuries, any dividend-bearing, yield-bearing equities, just in a crypto wallet?
Definitely. And you might also hold, a certificate of ownership of a painting that you have in your house. And you can, all of them, you can decide to leave them on that wallet, or you can decide to move it around. Because what is great about digital assets is that it breaks down the silos, right? If you own a lot of shares that you keep with your broker, that is whatever bank, right? But that bank, their mortgage rates are not great. You're stuck. Like, you're stuck in that silo. You cannot use, or even if their mortgage rate is great, but they don't allow you to use your shares as collateral for that loan, because that's their internal policy for whatever reason. You're stuck there. And you need to open a new account somewhere else, blah, 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 shop around in the market, go through a new KYC, all of this, so that you open yourself another silo where you can get your loan. If those shares are fully digital, you just move them around. The same way I take something on my desk, there you go. You take your shares in digital form, you bring them to another provider, or it can be another centralized provider or a decentralized market. You put that as collateral, you get cash, and you do whatever. Like, you break down the silos to manage your assets. And I think that's going to apply to everything. So yes, what is tough is to put a number of years on it, right? Because tokenization of everything has been the theme in crypto since 2017, and only now we're really starting to see that wave. But I think that eventually you will have an account, call it a wallet, call it a bank account, call it however, depending on what you prefer, and there you will gonna have cash, you will gonna have equities, commodities, fixed income, whatever you want to have as an asset, but they will all be fully digitally represented, which means that you can take them out and send them away and use it however you want outside of just the lock that a centralized intermediary is giving you.
Hmm. And in your client experience, are there assets that are particularly demanded at the moment? Is it equities? Is it fixed income? Or what type of assets are already tokenized at the moment?
So today, the biggest example are stablecoins. If you look at it's the most basic asset, so to speak. I mean, it's really just cash. But that's what 250 billions in total in market cap, and that's the first big mainstream example. And the reason for it, again, it's if you've done transaction internationally on US dollars, and you need to send USD around. If you're yourself not in the US and you need to do that, it's a nightmare. It's complicated. You need to find the right banks to do it. It takes 3 days. Blah 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 blah. Now you have a stable coin. It's the same value behind it, same thing, but I can send it in seconds everywhere in the world automatically, 24/7. It's just better. And so stable coins, I think, is really the example. What we're seeing next, and that's what we highlight in this report, is that money market funds are following in terms of size today. I think it makes sense because who's using tokenized assets today is kind of the crypto natives, right? The people that are used to this representation of value, used to working with wallets and all of that. And most of that crowd has been investing with a lot of directionality, because that's where the investment opportunities in crypto market, and now they're seeing ways to get some yield as well through these some of those tokenized those yield-bearing tokens. So there's a way to get yield, a bit of a different of return. So that's where we see getting popularity. But I think that equities are following quite closely. It's still a lot smaller today. I think it's not yet at. I think it's below 100 millions in total, kind of a market cap, so to speak, for tokenized equity. But I see that multiplying over the next couple of years, and we're seeing it already. I mean, we published this report in I think it was in February or March, and then 2 months later, Kraken announced that they're going to have tokenized equity on Kraken, right? So you log in on Kraken, you have Bitcoin, and you have whatever stock you want. I was going to say Tesla, but given the stock performance of Tesla yesterday, maybe that's not the best example. Let's stay away from
Yeah, at first it's always the hype stocks that are tokenized, right?
Of course. Maybe you should start with GME, and
Yeah.
see if that picks up.
So as a retail investor, if I'm listening now and I'm a retail investor and I'm interested in like changing my traditional stock portfolio that I'm trading on whatever, Robinhood, Trade Republic, and I now want to change it to a tokenized portfolio, could I do it? And if yes, how? Would I need a special wallet, or do I go to Kraken?
I don't think you can. I mean, it depends on how extensive your current portfolio is, right? And probably not everything is tokenized yet. But as I mentioned, players like Kraken, they announced they're going to have tokenized equity on the platform. And so if you become a Kraken client, if you're not yet, and there's probably others as well, right? It's just that I have that in mind right now. But you open an account there, and you can replace part of it, and say now instead of holding my stock through my custodian or my broker, I hold it initially on Kraken, and then if you want to self-custody, you move these to have them on your wallet. That's something I will need to check whether it's 100% possible today. I don't know, honestly, with the Kraken offering. I don't know exactly the details of it, but that's how you would go about it. And how then after that, how do you safeguard those equities? It's either you do it through an intermediary because you trust them, or potentially eventually you'll have the option to do it yourself, the same way you can self-custody your Bitcoins. But it's not. What I'm describing here is what we are going towards, right? It's not there yet. You cannot exchange, like if you own a small kind of mid cap from an industrial company in Germany, most likely you cannot find that share tokenized because it's not there yet. I think it's where we're eventually going, but as you say, it starts with kind of the most hyped stocks, the one that are most likely to be bought by people that are very tech savvy, because it's still something like you need to know your way around your digital life, so to speak, to be able to own those stocks. So that's where they start. But it's a momentum, right? It's a trend that is being built, and I do think that eventually it will be completely transparent for people. They don't know whether they own a tokenized stock or not. They just own a stock, and it just so happens that it's tokenized because it's a more efficient way to represent it. That's it.
Maybe apart from tokenization, what are you most excited about in terms of cryptocurrencies at the moment?
I'm very excited about when you look at what digital assets do, right, is that they really allow to combine the ease of exchange of something that is digital, right? An email, a picture, whatever. You can exchange things super easily online, right? You can exchange information very easily. But the problem is that you have no way of knowing whether that information is authentic and whether that information is unique, right? With digital assets, and in this case, for the uniqueness with NFTs, for example, you combined the ease of exchange of digital with the uniqueness of something that is physical. You combine the two. And I find that super interesting. And one of the areas where I have very high hopes for future application is around digital identity. And I mean, it's a very hard topic, one that is technologically hard, but also ethically complicated. Like things like WorldCoin, that's what they're going after, right? Is really creating this digital identity, proof of humanity, however you call it. But there are very big ethical concerns around having one big database that is centrally controlled with the eyeballs of everybody. Like it feels a bit dystopian and a bit scary. But in general, like the concept of getting ownership back of my digital identity, of the data that I create and I disseminate online, that's something that I'm super excited about. But frankly, in my mind, there isn't yet one token, one company that I could point at and say, these guys are doing it right. But I believe that when we unlock that, and that online consumers, we're not dependent on Google, on Facebook, on whoever to manage our logins and disseminate all of our data, but we can really have control of that data into one wallet, and then we can decide, yes, I'm sharing this with that counterparty, but not with that, and I'm taking it back. Like really creating that control around your digital identity and data is something that I'm very excited about. But unfortunately, I don't have one company that even I could potentially invest in. So, okay, these guys are killing it. They're really going to crack the thing. And it's been a topic in crypto for 5-6 years. Huh? I mean, it's not new at all, but I think it's very hard to do because it makes so much sense. It makes so much sense. It touched at so many facets of what is value, what is private, what isn't private, what is humanity versus interaction with machines and networks. It touches so many of those very sensitive topics that it's very, very hard to do right. But it is an application that I'm always excited about.
Yeah, thank you so much for this insightful talk. You really got me excited. I love your visionary approach to cryptocurrencies and asset tokenization. Now my question to you, dear listener, could you imagine holding your traditional stock portfolio entirely on-chain? If so, let us know in the comments on YouTube. Until then, we say goodbye and see you next time. Bye-bye.